Hello guys, happy Wednesday. It's that dividend guy coming at you with another dividend investing video. Today we're going to go over the overall portfolio performance, the individual stock analysis, and then the stocks that I've switched out on my watch list. So for today, we are down about $110. For the week, we're down $451. For the month, we're down $688. But then on the 3 month mark, we're up $755. For the year, we're up $1,700, almost $1,800, and then all time since April 13th of 2018, we are up about $1,790, almost $1,800, a 12.3% return on investment since I've been in the market. Can't complain about that. Keep in mind, long term, we're doing phenomenal. Short term, anything can happen. We're down. So not a huge deal. Honestly, that means that there's deals in the market. So let's take a look real quick. 98 shares of Altria Group. Today we are up 30 cents, a little over 30 cents, 98 shares, about $5,000 of equity, 45.30 is our average cost. 30% of the portfolio is an Altria stock. Today we're up 34.30 or almost 1%. Total, we're up $511.23, 11.51% return. Not too bad. It is going up from where we had it, so it's growing. And I am dividend efficient in this stock, which means that I can buy at least one share of Altria Group, and then I can find another investment that I like and reinvest the rest of the dividend money into a share of another company. So that's great. Next, we have Coca-Cola, 17 shares at 972 equity in the stock. 51.10 is our average cost. About 6% of the portfolio is in Coca-Cola. And then we're up 323 today, up 103.72 for the deterioration of how long we held the stock. Next, we have AT&T down a pretty decent amount today, which would be a good buying point from where it's been at. 62 shares, $2,300 of equity, 31.10 is our average cost. About 14% of the portfolio is an AT&T stock. Today we're down $90, negative 3.78. Total, we're up $373.26, or almost a 20% return. AbbVie, 60 shares, about 40, almost $5,000, 49.8 equity, and then 72.22 is our average cost. A little over 30% of the portfolio is in AbbVie stock. We're down $46 and some change. Total, we're up $646.64, or 14, almost 15%. Tangent Factory Outlets, SKT, it gained about 40 cents today. 5 shares, almost $80 of equity, 15.29 is our average cost, so it's up from our average. About 0.5% of the portfolio is an SKT stock, and that will go up because I can buy it with the remaining Altria dividend, like I did last month, or this month. Next month, being February, I should be buying some more SKT with the leftover dividends that I get from AbbVie. So we're up 375 today. And up $2.03 or 2.65% in the long term. Next, we have Target, which is down $1.17 per share at $114.27. 10 shares, a little over $1,100 in equity. 87.68 is our average cost. 7% of the portfolio is in Target stock. Today, we are down 11.70 or 1%. Total, we are up 265.92. We're up 30% on this stock. Next, we have ExxonMobil. This one's been the big loser in the portfolio for a while, but it's fine. It's paid dividends for a very long time and increased them. So not worried about it. So today it is down about 24 cents. 28.9 shares, a little over 18, almost $1,900 of equity in the stock. 73.50 is our average cost, so we're far down from our averages. Almost 11.5% of the portfolio is in ExxonMobil stock. Today we're down almost $7. Total, we're down almost 300. That's all right, though. Then finally, we close out with Walgreens at 52.28. It's down 50 cents. We only have one share. Equity's 52.28. Average cost is 54.60. 0.3% of the portfolio is in Walgreens stock. Today, we're down 50 cents. Total, we're down 232 or 4.25%. And that closes out the portfolio. So overall, I think we break even. Nope, we're down. 1, 2, 3, 4, 5. 5 stocks are down, 3 are up. So today, but our average costs are better than what the market did today. And then as for the watch list, I believe I made one change. I did add Colgate. I switched out a stock for it. because it's a consumer staple. I feel like it's very consistent. It has household products. It's a lot like Procter and Gamble. I bought it for the same reasons, but it's a lot cheaper. So it's about half, little less than half or a little more than half the price of it. So it's a great value stock. It's cheaper than everything else I had set for that month, and I switched out IBM for that. So now I have Colgate, and then the other one that I did ad was Dominion Energy, because I thought about it and I'm like, you know what? Um, I want consistent dividends, right? And to me, the most consistent things that you can have: electricity, water, waste, right? You're always gonna need electricity, you're always gonna need water, you're always gonna need somebody to pick up your trash. So that was something in the portfolio that I really wanted. When it comes to dividends and growth, I like Dominion. I think it's a great play on the electricity utilities sector, so I did switch it out. So I did make a couple changes, added Colgate, added Dominion, um, and like, and I'm very excited because I think the third month of the year, 36912, is going to be a very good, high-paying month for me specifically, because a lot of my favorite companies are actually in that pay period. So Johnson and Johnson, I really love Waste Management. I like Dominion as well. And then Colgate's going to be a great one as well. So I've made a couple changes to the watch list. I have my favorites, but I'm very excited to see how much we grow in 2020. So thank you guys so much for watching. I really do appreciate the support and the comments that I've been getting. Remember to follow me on Instagram at That Dividend Guys, same handle as my YouTube. And remember to hit subscribe so you don't miss any content. I update you guys every Monday through Friday on my portfolio, how the market's doing, that type of thing. So if you want daily content from me, please hit the subscribe button and the bell notification so you don't miss a single episode of my dividend updates. So thank you so much for watching, guys. Remember to hit the subscribe button, and I'll see you tomorrow. Remember, volatility is welcomed for dividend investors. It just means that the prices are at a good premium, and it gives you an opportunity to buy and get a higher yield. So don't freak out of the market. I know I have a lot of newer investors watching, so please don't get scared with volatility. Realize it's a welcome thing, and it will really help you prosper. If stocks are low, buy them. If stocks are high, sell them. So if they drop, buy them like crazy. Anyways, just want to do a little tidbit there to make sure my newer investors don't get scared. I know volatility can be tough, but trust me, it'll be okay. So thank you guys so much for watching, and I'll see you tomorrow with another dividend investing video. Take care, guys.